Yes, 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 yes. What's up, man? Chaos. What's up, Instagram? The chaos price. Chaos of price. In 1978, J. Wiles Wilder wrote a book called New Concepts in Technical Trading Systems. 1978. I was 8 years old. This dude wrote this book. He was obsessed with the stock market. And back in his day, they plotted this shit by hand on a chart after work. So they'd get home because the data didn't come out till after the market closed. And then they had to put it together. And then the data came out. And then they'd go over to their chart. This is what we have here. This is a chart. If you notice, mine are white. Most people's are black. I don't know why that is. I think they say they can see it better. I can't. I've never liked black background charts. Lighten up your world, man. Let a little sunshine in. Be positive. It ain't got to be all dark and gloomy. The market is a wonderful place. It's a place where you can come and you can just get what you want. Whatever you ask, the market will give it to you, man. You want some excitement? They got plenty of that. You like to gamble? Man, we got you. Come on in. You want to invest? Yeah, we do that too. What about this? Man, we do a lot of things. We're going to kill the comments, man. Why you going to... Some people try to ruin church, man. What's up with that? The reason I talk on Sundays about money flow being like service, church service is religion, because only through the power of consistency and repetition, duplication, can I accumulate and grow in the stock market. And what I'm trying to do is look at it and bring some sort of order to what I see. You'll see price moves down. Each one of these is one day in the stock market. That bar. Now, if you don't know that, you should have no business being in the stock market right now. Unless you're just doing index funds or something. If you're just putting it with a mutual fund, yeah, you don't need to know shit. That's the beautiful thing. That's how rigged this game is. You could just put it in an index fund and it goes up. Some people don't want to do that. There are people on earth that do not want to grow their money. And I was talking last week that all investments, you need to understand this, okay? Let's take this shit to another level. All investments in the world are judged against this. It's $406 called SPY, S-P-Y. This is one of the most traded things on planet Earth. On planet Earth. It's one of the most traded things on planet Earth. If you had a top 10 list, Bitcoin would be in there. What else? Gold. What else? Bonds. Not Pokemon cards. I'm not talking about that. You got friends that know more shit about Pokemon cards than the S&P 500. Now, nothing wrong with knowing about Pokemon cards. You might make some money. But if you got the ability to know about Pokemon cards, you can know all about this. Well, in 1978, Wiles Wilder wrote a book called New Concepts in Technical Trading Systems. I was 8 years old. I did not know that that book would change my life. That book would begin to explain to me when something was expensive, if it was, and it just like, hey, right now it's a little hot, man. And then it would say, man, this is on sale. And I used to wonder, man, what if, you know how they say you should buy low, sell high? And man, what if life was that easy? And you're like, well, kind of is. There's an indicator. And I was like, what's an indicator? Well, 1978, Wiles Wilder wrote this book. And in that book, one of the things that he created was a math formula. The math formula is called relative strength index. We use it all the time. You take it for granted. You don't even know who wrote it, do you? If that's true, fix that today. Don't keep using this man's work and not spend 10 minutes checking out the man. So this work that we all put our hard-earned money on, we should know this man. Man, I know this man so well. I bought his non-stock related material. I thought you were into the stock market. Nobody's into the stock market more than me. I got stock market guru ads. I got books from 1894. It's one of my oldest books on stocks, like an original book. I need to show some of these. I got Wallace Waller's book, the original copy from 1978. You like the stock market, don't you? Oh, it's weird to me. People collect bunnies, little ceramic bunnies. And it's like, man, what if you collected trading books? Like, what could you find? What could you learn? So much information, man. So cheap. It's our history, man. So the Relative Strength Index, or RSI for short, is a tool which can add new dimension to chart interpretation when plotted here's the big word, listen up, in conjunction with a daily bar chart. The man that created the actual indicator, New Concepts in Technical Trading, written in 1978. And by the way, your parents were too busy being busy to read about it. So were mine. I said, Dad, where were you? 1978. Wallace Wilder came out with a chart that told you that if it went green, the stock price was too high. In 1978, he wrote this. The computer today, man, we don't even have to do the calculation, bro. You ever looked at the calculation? I thought you liked the stock market, man. Come on, man. You can't know all about the Atlanta Braves and not know this. So we need to know this. Like, take your game up. Take your knowledge up. Take it up a bit. Get really into these. What are these indicators? Because the more you get into them and understand them, like moving averages and what does this mean? What is this golden one? You see it here? It says it's in gold. It's on purpose, man. Why is this important? And it's not for some stupid 50-day crossover, although people look at it, so we need to look at it. All of that is, you ever heard that? The death cross? It's like, man, stop. Money flow caught it before it, and then he's going to get in it after it. Like the money flow's ahead of the death cross, man. It's going to get the sell before and it's going to get the buy before. So if it's before and before, I don't need to look at it. You see what I'm saying? So what I began to do is 1978, this was written, and it says the Relative Strength Index is a tool which can add new dimension to chart interpretation when plotted in conjunction with a daily bar chart. Some of these interpretive factors are, this is the guy that created the indicator. The very first paragraph he says, when plotted in conjunction, for all the weed smokers in the back, in conjunction means along with, together, BFFs, in conjunction with a daily bar chart. The creator of the indicator wrote that right there. It's the very first words in a book in 1978 on the RSI Relative Strength Index. This is the most powerful indicator in technical analysis. This one is used by everyone. There's nobody that doesn't know what this is. It's the single most self-fulfilling indicator in the stock world. Meaning when that shit bangs, it's pretty likely what's about to happen next. And whole systems and whole things have been built on it. And a lot of people claim credit for various things. It's just this. They just trying to fancy this up. That's all. Hey, he painted it blue. Let's do it. Something blueberry blue. Okay. They just use this. Virtually everyone stole from this. Okay? It's kind of like in the beginning was the Word, and the Word was what? God, right? It was with God. Like, that's it. The beginning, the Word, man. Right here. Relative Strength Index, very first word, is a tool which adds new dimension to chart interpretation when plotted in conjunction with a daily bar chart. Daily. I get asked all the time by kids, what What time frame you use? Daily. Now, that doesn't mean I don't drop down. Page 127 of the Money Flow, Chapter 8. Developed by J. Wallace Waller, the Relative Strength Index is a momentum oscillator that measures the speed and change of price movements. RSI oscillates between... Do you know what oscillate means? If I asked you to oscillate for me, could you do that? RSI oscillates between 0 and 100. According to Wilder, RSI is considered overbought, oversold. Now, while that's Gerald Peters' interpretation of Wilder, of my man JW here, he starts with, this is his words, not mine, tops and bottoms are indicated when the RSI goes above 70 or drops below 30. You know a lot about bottoms or tops? I didn't say it, he did. Tops and bottoms are indicated when RSI goes from 70 or drops below 30. So I hope you can oscillate. That's oscillation, man. What'd you think it was? So what it lets me see is tops and bottoms, man. And that's a beautiful thing, man. That's a beautiful thing. You now have insight. You have power, cosmic power, universal power, the ability to predict or do. So it's right so much that I use it as buy and sell signals. In the basic sense of what should I do here, buy or sell? And if we're using it on a daily chart, which is what we talked about, I didn't say it, he said it, not me. If we're using it on a daily and we're using it to identify tops and bottoms, he says, second thing, chart formations, which often show up geographically on the RSI, may not be apparent on the ball chart. And that's where he gets into some weird shit. And you're like, what do you mean? Wilder would come over here and he would draw trend lines on the RSI. Now listen up, man. I'm about to take you into some Illuminati shit that you ain't done much of. Whilst Wilder would draw lines that he calculated by hand on graph paper. Now watch. Listen up, man. He would draw it on a piece of paper. I do this. I can't show everybody everything I do. It's too... Their brain fucking melts. They can't comprehend it. They can't see it on every chart as soon as they... But this is what you need to be seeing. These areas of crossover or areas of concern. Now notice it's a little bit off from the top of the RSI, man. Now, I don't do this. Money flow naturally takes place. But if we look at this price here, I'm going to assume you know what I know. That's what you see, right? Now, where are we at on the money flow, man? If you could see what I see. Relative Strength Index is a momentum oscillator that measures the speed and price change of price. Speed. Now, if I came to your house and I said, hey, I need you to oscillate for me, you know what that means? RSI oscillates between 0 and 100. And the RSI is being measured on a money flow move. What is a money flow move? A money flow move is price goes stage 1, 2, 3. There's your moves. It's following the movement of price of the 4 stages of price movement as determined by the 20-day, the stage themselves, right? We won't go through all that. Connect your anchor point, get your sideways, call your stage 1, boom. Now we're waiting for the breakout. The moment it does, it confirms we're in a money flow move. It went from a 1 to a 2. We're not talking breakouts, but what we're talking is inside of all of that happening, the RSI is measuring this whole move, the velocity of price oscillating between stage 1 and stage 3. Is it okay with you if price oscillates? Are you all right with that? Means your money's going to oscillate a little bit. Next time somebody says, what are you doing, man? I'm oscillating. What are you doing? They don't know about that, man. You ain't got a friend one knows about RSI. He knows all kinds of dumb shit, but not the RSI. The actual holy grail of price movement. It really is, man. I mean, you could just follow this one thing and you'd be all right. You'd do okay. RSI is considered overbought. Take profits when it's above 70 and oversold when it's below 30. Signals can be generated by looking for... All right, now we already said one word that I want to go back to. Conjunction. Now, do you remember conjunction, junction? What's your function? Any of you old enough to remember that? Any of you old enough to remember that? Somebody on YouTube was talking during class, said, take a look at silver. I'm already long silver, bro. Come on, man. Silver is not going to do the money flow without me. Conjunction. Conjunction, junction, what's your function? So you remember conjunction, right? Now, I didn't say conjunction. Wallace Weiler did. The relative strength index is a tool which can add new dimension to a chart interpretation when plotted in conjunction. This is so important. Conjunction with a daily bar chart. That means together. RSI is considered overbought when 70, oversold when below 30. Signals can be generated by looking for, in our new word, divergence. Divergences, failure swings, centerline crossovers. RSI can also be used to identify general trend direction. So as we look at this, you're like, man, we can draw all over it. You can draw all over it. He used to use trend line breaks. That's one thing he used. Also, what else did he use? Meaning, when he would plot it, it's just this, man. What else did he use? Center line breaks. See, it stopped on the center line. There's the break. Now, notice when the break happens, notice what's happening. Price is closing below the 20-day moving average, which on the money flow chart, based on the 4 stages of price movement, is what? Best time to sell. Get out. Now, in a perfect money flow move, I would have less shares here than I had down here. And you're like, what do you mean? Meaning, as it moved up, bang that RSI. I know, signal. Take your money off the table. You won. You're winning. Downsize it because it will turn, and when it turns, you'll have less shares. So you will have made more going up than you're losing going down. And it's not going to keep going up. And that is trading. Inside of that is the oscillation of price from 0 to 100. And then it pulls back because price runs up, price goes sideways, price pulls back, price goes sideways, price runs up. Now, it may not do it this way perfect, but sometimes it's so perfect, it's like taking candy from babies. You're just like, cool, let me buy a little. Cool. Oh, let me add on a breakout. Oh, bang, 70 RSI. Let me sell 10, 20%. Go into a 3. Let me sell a little more. Shit, I'm going to sell a little more. And then we start to roll. I'm down to half of what I had over here. That would be you oscillating. So if I said, hey, let me see you oscillate. That's oscillation right there, man. That's you oscillating. Now, here. This is Uber. Uber did something, and I talked about this last week because I think it went over most people's heads. They were busy. Everybody's too busy being busy to see all these sweet little things that are given to us that are right here in front of us. And I'll just, where are we at here? Come on, man. What'd you just do? Oh, it's logged me out. Come on, man. So as we look at Uber here, Uber did something pretty wild. It went into a stage 4 and then just stopped. So it did our sell here. And it completed a perfect move, man. Watch this. Uber started down here. Put in its box, right? So we had our stage 1. It went to break. Held stage 1. You should be good. Went to break, right? And then what? RSI goes green. What is that telling you? Overbought. So if I'm an investor, I damn sure don't want to buy. If I'm a trader, I need to take the chips off the table. Perfect trade. Bam, bam. Right there. That's the money flow trade right there. That's right out of the book. This is it, man. Price oscillating stage 1 to 3. Bam, 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 bam. Got it, go. There's no hang-ups there, man. Hit it and leave it. That's trading. In, out, man. Flexible. And then what? Flexibility, man. Your ability to boom, cash, waiting. That's trading. And there's people that can trade like that, sharks like that. And if you got that in you, do it. But let me tell you, if you got 18 distractions going, you're probably just going to lose a lot of money. Because that game ain't for the weak, man. And you can do it. But you need to take large positions, tight stops, set targets, execute on it, right? And it's not going to be using filters, following a bunch of stocks. You don't know who they are, man. People buying crazy shit. It's like, no, man. You don't need to do that. One of the inherent built-in safety mechanisms within trading, I don't know if you know this, is the thing you're buying. Meaning you get to choose that, man. You could outsource that to a complete arbitrary fucking computer just handing you a random thing of 9,000 things that set up, or you could hunt it down. You're like, here's 50, 60 assets that I think, gold, oil, bonds, various stocks, some biotechs. You got like 10 of those. You got some oils, and you're covering everything. You don't need a filter. You are a filter. You're oscillating, man. You're not oscillating on zero. You're watching them, man. You scan them. Where's oil? Where the fuck is oil right now? Like, everyone on here should know where that is, man. So I talk about Uber a lot, and then people say it back to me about Uber. What is that? I'm manifesting this shit, man. I'm not getting stopped out of this. So I don't trade this. I'm not trading this. I'm trading this for a bigger payday. So what I'm doing is using the money flow to accumulate shares. And it's not so big that all of a sudden I got to change my mind and go do something else. It's this or fucking zero. So that's the game I'm playing with this stock. And I've played that game with a lot of stocks like that, man. Now, this one doesn't pay it. I'm going to get out of it when it hits its true value, man. And it's going to hit it, man, like Microsoft did, Intel. All these companies at one point were coming up. And then they got there. And you get there like year 10, 15, 20. That's when companies mature. And in the middle of that, 5 years, 10 years. So Dash is another one. People are going to sleep on this, man. You're going to be like 40 and your kids are going to be like, why did you not buy Dash? That seems pretty obvious. They bring us food every day, Dad. You're like, oh, I know. I was playing Pokemon cards. Like, that's going to happen. That conversation is going to happen. I used to ask my dad all the time, how the fuck didn't you buy Intel? It's in every computer. You know what he did buy, though? Emu eggs. Shit you not. You know the eggs for the big birds? My dad worked at Intel. How'd you miss that one? That's how easy it is to miss, man. I can pick myself. There's stuff all around me. I missed it. I was running filters. I was trying to trade things, like things that were, instead I could have traded things right in front of me, man. So what that does too then, one is that adds a little bit of built-in safety. And two, right, it allows us to start using this movement of time. And so if we have the patience, listen to this. If I'm a short-term trader and I'm sitting at home, I'm watching fucking Dash, look at this target range that's setting up through here as a short-term trader. So if I'm following the money flow on a daily, stage 3, RSI didn't quite hit it, came down. What happened? RSI went extreme. Wiles Wilder took the time in 1978 to write me a book to explain bottoms in his words. His actual, he goes, relative strength index is a tool which can add new dimension to chart interpretation plotted in conjunction with a daily bar chart. Some of these interpretative factors are, number one, according to the guy who created the indicator in 1978, where he used to write by hand with pencil on graph paper, tops and bottoms are indicated when the RSI goes 70 or drops below 30. I'm like, oh man, appreciate you working that out for me. We're going to take it up a notch and make it where I don't even have to draw it anymore. So now I'm like, all right, I probably got a bottom here. Now, I know Wilder used to throw trend lines on here. You get a lot of, I don't fuck with it because you get a lot of fake signals, man. Like there, is that taking me out on the money flow? No. And you saw Dash here start to money flow, went to breakout, came back down, holds that bottom, and look, it's just a fucked up pattern. It just can't get going. So the more we draw this out, we've talked about this in other classes, in other videos, we go through this. When the moving averages start to go sideways, it tells us that this is all fucked up. So we're just going into a range. And the hardest ranges are the ones that have real wide stops. But if you're a more shorter term trader, watch. See this movement here, man? Tries to get out, comes back down and stops right at the bottom of it. What do you think the chances are that it could go back to the top? Is it possible that can happen? Yeah. Now, if we add one more layer on this onion, we go look at the S&P 500, and it's looking like it might want to break out. So if the wind goes up, what do you think this stock could do if it's undervalued? Right? So on one hand, we could want to own this so that when you're 40, your kids don't go, how did you not know to buy DoorDash? Like, they deliver food to everybody in America, man. Like, Uber's not a secret. Uber's not a secret, guys. Airbnb's not a secret. That shit's happening right in front of you. Just like Tesla was. Just like a bunch of them, man. Now, I think there's something to competency or understandability. You're like, what do you mean? Meaning, if you're going to ride or die with a stock, there's some things we got to look at. One, we can't get that over fucked up in it. Two, we need to put some money in it so it matters. You get what I'm saying? Meaning I'm not putting my entire life's fortune in Uber, right? But I would put 3, 4, 5% of my net worth into that. Maybe 5. I might push it sometimes. And if I push it on that time, I might then jump to something else and say, okay, I got to work on this over here because I can't. That's just the way that I do money because of the uncertainty of the market, the economy. I'm not the manager of Uber. That dude may lose his mind. Like, I'm relying on other people to accomplish some shit, Same with if you buy a property and turn it to a manager. It's like, okay, we got to manage the manager, but you're accepting that other people have some power and control that you don't have. And that's what keeps most people out of stocks. That transference of, oh, here's my money, here you have it, and then just letting it be. Like that uncertainty, that oscillation of price going up and down, that's what keeps most people out. But what I figured out is as I make sense of it, in the beginning of the money flow, I say, where's it at, man? Come on, man. Open the book, man. A fractal's a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, pictures of chaos. Geometrically, they exist in between our familiar dimensions. Fractal patterns are extremely familiar since nature is full of fractals. For instance, trees, rivers, coastlines, mountains, clouds, seashells, hurricanes, clouds are examples of abstract fractals. The rhythmic pattern of nature. Well, Price does it too because it's the rhythmic power of the emotions of millions of people all over the world. So on Monday, we wake up and we all look at something. We're like, oh, fuck. Boom, sell. Down it goes. Why? So-and-so tweeted. Sell. And information is being exchanged based on that. That's all it takes, man. Chaos. And so price goes up and down. And here's what we know. At the end of the day, price only goes so low, so far. Even in a down moving market, if you're in a bear market and the market's going lower and lower and lower, it's going to go down and then sideways and then run up. And then it won't quite get past the previous high. Remember we talk about this when the stage 1 breakout, I assume it's going to the previous high. Look left. They say, where's your target? Look left. You're like, what do you mean? Well, if I'm looking over here, where's my target? Well, where's the previous high, man? Find the previous anchor point. Where's that box at? You're like, well, it's right around there, man. Well, guess where my new high is? My target, right in there. So I look left. This is on a daily chart. Well, if I'm short-term trading this and I'm watching on the daily, I'm probably dropping to the 1 hour, right? We're waiting for the breakout, man. These levels become, see, you can just keep going down fractal. So here was the breakout. Where's the target? Look left, previous high. So it'd be right in here. Right around in there. Almost hit it. Still going. Notice the RSI is extreme. So the moment we got this extreme on the 1 hour, so if I'm watching the daily in the 1 hour, this is what a short-term trader would do. I mean, you'd be watching all these time frames, right? You have to root yourself on the daily. So what I'm looking for, if I think the daily says we're going higher, now I'm on the lower, I'm looking for that moment that it starts to do that, man. And that pattern's going to form on the daily, on the hourly, in the direction of the daily, and then we're going to get our move, man. And bam, there goes the break. You know, if you were close enough, you should have probably already been in it. And then what? It runs up, man. So we go from 60-something. There's a $4 move on a 1 hour chart, you know. That was a day and a half swing trade. That's swing trading, man. Where's the target? Previous high, right? Well, when previous high and RSI fall that close in conjunction, that's it, man. Trade's over, man. If you're short-term trading, that's the money flow. Bam, 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 thank you. And if it keeps going, I'm not crying about that. I caught the money flow, man. That was the money flow. That was the oscillation of price from 0 to 100. Following the money flow, man, right here. Stage 1, once we can identify that. So what Wilder was trying to say is on a daily chart, once it goes extreme, say below 30, and we have an anchor point, and on the daily I start to see a stage 1 being built out. Well, if I want to jump that, if I'm a short-term trader and I'm looking to bam, bam, get in, give me some money. So if I'm on that, if I put, are we back on this is hourly. I mean, if I got $6,100 on that trade and my target's right there, I know my stop, you know, for me, if you're going to have to determine your own stop, but my stop's going to be below the stage 1 area. Right around in there. Right? And if you're doing that game, then it's like when you get in, man, you got to take this hit if it turns because you need capital. Meaning your money's made on the trade, man, not waiting around. That's trading. And that's all going on inside of the money flow. I have a lot going on. I can't do a lot of trades like that. I can do some like that. But a way that I can do a shit ton of trades is on the daily. You know, especially if I'm position trading them. Meaning, I want to buy dash on these stage 1s. That was another one, right? And what am I looking to sell them at these higher highs? But we got to think it's got some fundamental value, a reason to get it up there, right? Do we think it can get back up in here? Now we got a breakout. We'll see, right? Same thought process went into, I know if you're in the money flow gang with me, Snap. Same thing. We tried to play the break here. Bam, gaps down. If it's a company I like, I don't do anything with a 10% gap against me, 10% rule. What does that mean? It means I usually wait to see what happens. I'm not buying that shit, but I'm not selling it either. I need to go read and see what's up. It hadn't even banged the RSI yet. Think of that. The RSI hadn't even gone extreme yet. So, I wait, right? And we pick some up, and we've picked some up. So we'll see. Think this is worth at least $15. After this latest news, it banged the value down on the stock. We'll see. But that's the thought. So if I'm trading this or I'm playing this and I lay out this fundamental case that I think this stock is worth at least $15, right? So then now how do I want to handle the money flow, man? If I go look and I see, okay, the S&P put in a bottom, right? We're looking at, where's the previous bottom? Over here. Where's the previous top? Over here. So draw lines, man. Be a little kid. That looks a lot like sideways up, sideways down, right? So just visually as I'm watching it, now I don't know if that's true. All that gives me is order out of chaos. So I don't need to know. They'll be like, why'd that go up? I don't know, man. More people bought it than sold it. Like, duh. Why do you think something went up, man? Why do you think that went down? People sold it. Like, imagine if life was that easy. It is. One of the most useful tools employed by many chart technicians is the momentum oscillator. The momentum oscillator measures the velocity of price direction. Now, write that down, kids. When the price moves up very rapidly, at some point, it is considered to be overbought. 1978, Wallace Waller wrote a book titled New Concepts in Technical Trading Systems. And in there was first we discussed the RSI. He's the creator of it. They would hand draw charts using graph paper and draw the days on there with the little bars to the left for the open and little bars to the right to the close. So each day you put your hand on price and drew it by hand, feeling the movement of price each day as you plotted on your graph paper, your chart. Man, it's hard for people to come to Discord. Imagine if they had to draw paper, had to draw the chart by hand. Oh my God. How many people would... We used to have call trades in on the phone, man. Hello, this is Gerald Peters, account number 6743217B9_blue. Yes, sir. Codename Hawk, Hawk, Hawk. I repeat, buy 100 shares of Snap. Oh, yeah, I'll hold on. Hey, yeah. Oh, count number. Oh, it's count number B677. What? Oh, yeah, I'll hold. Okay. Hey, man. That's how we used to trade. And here's the other thing, man. That cost $30, man. It was like $29, some shit. Per side. And that was the new discount broker when I was doing it. $29 per side. So you got guys drawing charts by hand, paying $30, $40, $50 per side of a trade to trade. And that's the guy who creates the relative strength index, hand drawing charts every day. I don't know, man. I think that's pretty cool. I wonder if I would do it. I know for goddamn sure I'd do it. That's all I would mean. I've been doing it my whole life, 20-something years. I can't imagine not being in the stock market. It always weirds me out a little bit. My friends that don't own stocks, I don't know what's wrong. I don't know what's wrong with them, man. I try to talk to them, man. I can't talk everyone into it. Now, some of them are rich and don't own stocks. That's cool. And I think man, it's weird to me that you're rich and don't do stocks. It's weird. But it's not for everyone, man. I'm like, man, but I got a tool they always say, well, I don't know where stocks are going. And I always say, they're going up, dude. Like, what do you mean? I mean, stocks go up. 70% of the time, stock market's going up. I was explaining, this guy's smart and rich, man. And he's like, what do you mean? And I said, look, see this chart? See this chart here? And he was like, yeah. I said, this is a 1 day chart. Like each little bar you see is 1 day. And over here, the market woke up one morning, and that was the wake up. Bing, the bell went off. Ding, ding, ding. Trading opens. And then when they close that bitch, it's right there. Now they might be inverted. It might have opened here and closed down here. And then in the middle, they draw a line. And that's called a bar chart. Or they draw a candlestick. And based on the color, you can tell if it was an up day or a down day. Imagine if you had to draw. I just drew it by hand. You ever draw them by hand? Maybe we should start doing that. I might start doing that. I'm going to start drawing the S&P by hand. Get some graph paper. I should do that on a whiteboard, man. We'll just draw it by hand every day. That'd be fun. Anyway, man, I digress. Not in conjunction. Oscillation. Divergence. These are new words you got to know. When price moves up rapidly, at some point it is considered overbought, and when it moves down rapidly, at some point it's considered oversold. In either case, a reaction or a reversal is imminent. The slope of the movement of momentum oscillator is directly proportional to the velocity of the move. The distance traveled up or down by the momentum oscillator is proportional to the magnitude of the move. Man. Proportionate, magnitude, oscillator, slope, velocity. Look at all these words, man. The slope of the momentum oscillator is directly proportional to the velocity of the move. The distance traveled up or down by the momentum oscillator is proportionate to the magnitude of the move. Man, what he just said to you right there is that they're measuring for 14 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And if all of those are straight up, man, that RSI is going to bang quick. If it slow grinds like a dog on your leg, like that, it may never hit, man. And it'll just start hovering there around the 50. And as price goes higher and higher, ever so small. Trying to think of the stock we were watching. It was one of the first times I'd seen it, man, it just grinded higher. And that RSI never got over 50. And it was just like the perfect mathematical setup that it just wasn't triggering velocity, meaning the quick movement of price. It just wasn't doing that. And it can just grind, man, and it could do it low. It could go low like that, just never bang in that RSI because it does it in such a controlled matter. You know, like here it dropped for 3 days and then what? Ate it up. What do you mean by ate it up? It worked off the RSI, man. You get it? So sometimes you can have a correction where it just works off the RSI, and that takes us back to Uber, man. You thought I didn't know you thought I forgot what I was talking about, man. I don't know why you guys doubt me, man. I'm trying to help you get money in the stock market. When you understand price movement, you'll be able to add confidently. And you might get it wrong. You say, what do you mean? You just got the wrong stocks, man. They're just not good. That's easily fixed, though. That's not a matter of fact. The newer you are, the more true and blue shit you should play with. Because in the beginning, we need to stack money, not so much win money trading. We need to keep you from losing your money. Okay, stage 1. There's just breakout right there. We ran up, we hit it. So now we know we're money flowers. So we're like stage 1, 2, and 3, baby. Then it comes down. You're like, oh, stage 4 decline. And I had a kid say, oh, I'm going to short Uber. Okay, dummy. Now, I say that because I like Uber, but that would have actually not been a bad thing if you were looking. Now, that's only if the market goes short, which you could make a case for that. But it put in that, it stopped there, man. Here was the problem. It refused to go down. What did it do? Look. "1978, old Wiles Wilder told us, if the RSI crosses above the 50-day moving average, it wants to go higher." I think that's how he talked. So as we're watching Uber, if you remember the other day, the market got smashed. Uber opened down and came back. I was like, oh shit. I don't know if you watch it like that. You might be running, oh, let me run filters. I gotta find some style. Shit, I'm watching this one every day. Like really close. Like looking at it each day. And as this thing builds out, what's it doing? I know what it's doing. It's working this off. And every day that's true. It's truer. I mean, it could break down and run. Fuck, I don't know. And if it did, I would tell you, next target right down here, that would complete a money flow pattern. That would have been normal. Wouldn't it change my opinion of Uber? It's just the normal movement of price. And my goal is now pick up some stage ones. I mean, that's the plan if it does that, man. But what if it breaks out and goes higher? Well, the plan is I got to buy the breakout. Right? I got to buy the breakout. That's a stage. This became a stage 1. We're now breaking out, man. That's what we're doing, right? But we can't do that if we're committing our money to shit we don't know. If you can't stay with the stock, man. You're gonna have stocks that you've been in and out of. They're gonna go up 300%. It's not gonna go up with you. Meaning you're like, fuck, dude, I was in that stock. What is it now? It's like it was $8. Now it's 38. And you're like, God damn it. Yeah, couldn't get it because I was over here chasing this stuff. I took my eyes off it. That's happened to me so many times, man. And one day I was sitting and I'm looking at, all these trades in and out. And I had a good year trading that year. I made some money. And I'm looking at my buy and holds and I'm like, man, I should have just bought shit tons of that every time the RSI was 30 and was going sideways. I should have just bought stuff. Right? And then if it went to break, let it run. And then next time it did it, I bought some more. And as time goes on, if you notice, what's happening is every time I add to my investment, because, you don't have enough in there to do much anyway. A lot of times people act like they got a lot in there. They really just don't, man. Because they haven't used the power of time, You got to, telling the kid this the other day. He was down like 50% in Uber. He bought some up near the high. And I'm like, okay. Well, first off, nobody gives a fuck where you bought it, okay? That's you, the only one that matters to. What does that have to do with the opportunity in front of the stock now? Because you're down 50% don't mean the stock can't go up 100% from here. So if you're going to take your money out, what are you going to go look for? And he's like, well, I go look for something that might go up. What if that's Uber? I mean, in your lifetime, if you worked at Intel, you saw it run up, come down, run up, come down, run up, come down. If you worked at IBM, ran up, came down, ran up, came down. If you worked at Southern Electric, it ran up, came down, ran up, came down. If you worked at Exxon, ran up, came down, ran up, came down. If you worked at Freeport-McMoRan, it ran up, came down. Cisco, Pepsi, Coca-Cola, McDonald's, Starbucks, Uber, Walmart, Target, ran up, came down, ran up, came down, right? They ran up, they came down. And I'm talking to a guy the other day. He works at Zim. He don't own any shares. And I'm like, goddamn. I bet he's like, man, I wish I could find me an opportunity to make some money. And I'm like, your company pays like a fucking ridiculous dividend, bro. Like, it's stupid. And he goes, yeah, they're making a lot of money. Uh-huh. Not catching on. Not seeing what I'm seeing. Meaning, how could you work there, see them making a lot of money, see the dividend on this thing is fucking ridiculous? How do you not privately go buy your own company, man? Like, we got to see that play. That's the money flow, man. You got to be looking. That's why this last book idea is like, I'm not doing another stock book, man. This stuff don't help anybody if their brain is closed. If you don't expect wealth, if you're not expecting, like the other day I talked to a guy, he goes, well, I'm not trying to get rich or anything. I'm not trying to be greedy. I'm like, why not, man? God damn. By not doing that, you're being greedy. By not doing that, you're being selfish. Because if you had all that, you'd be able to help more people, man, which is the opposite of being greedy and selfish. So it's like, man, you limiting you is being selfish. Saying, I don't want to be, I'm not trying to be. It's like, yeah, you are, just by saying that, bro. Like, we don't need another trading book. We need a mindset book, man. I mean, there's a, like, these things are all around us, man. These stocks, Ubers, the Dashes, the Airbnbs, these things are all around us, man. Stock market lets us play in that game. In what it allows you to do is you can play in such small amounts, man, and that you can actually use the power of time over time, man. Do you do that with all stocks? Do you write them all like that? No. I threw in the towel on probably 5 stocks in the last, 5 years. It's very rare if something was in my buying hold that I would ever cut it. Meaning if it's down, it's a buying. It's already fucking decided when I put it in. I don't change my mind once it's in. Because if you do that, you're going to end up cutting, all of them. Like when McDonald's was really getting hammered for everything being so fat. Like that was the chance to load up on McDonald's. And when things are all fucked up at Hanes Brands, and that was the chance to really load up and have a material difference in my life. I could get dividends to over $100. This may sound like a small thing to you, but if I can take a stock position and it gives me $100 every 3 months, all right, that's 2 zeros, man. It's not $10, it's 100. You couldn't use $100. So now you have boom, $100. And if you don't need that money, you just invested $100 and you didn't do anything. So when you come to this, so Exxon, let me give you an example. Paid me $220 last night. Now I didn't set it to buy more shares. I set it to go to cash. Why? I got enough shares, man. See why? Man. Look at all these stage 1s. So I bought a bunch on these stage 1s. Like large positions to where when it ran back up, man, it became like 30%, 40% of my stock holdings after that price movement. And so it's like, all right, I want to elevate my position size, of course. As a man grows richer, I want my share count to be larger. I don't want to be afraid of shares. I want to be like the guy. I want to eventually own 1,000 shares of Amazon, or of Exxon. But I hope I get a chance to do that lower. Like right now, settle it in your mind. Like if you own Exxon, it's $96, dude. It would be nothing to see it come back to 57. It'd be nothing to see it fall to 35, man. Just in my lifetime, look, back it up. Just in my lifetime, it's gone from $25 to $100, right? And I'm telling you, I have this conversation with kids all the time. This right here, they're like, oh, and it's like, bro, if you get this and can buy this when it's been down for a long fucking time, this is a month chart, dude. It's 1 month, 2 month, 3 month, 4 month, 5 months, 6, 7 months of accumulation is a lot of money up here. Yeah, if you waited, caught the breakout, and traded it. But let's be honest. How big is that position actually gonna be? Okay, so you avoided this, but didn't spend 7 months accumulating before the big move, and okay, you got a little trade going. All right, it's not buying you a new car or anything. I mean, is it? I don't know. I don't know how big you're trading. And if you can get that timing right, good. But one of the advantages a guy that's building out a portfolio has, especially one that's paying him dividends, is this company was buying us shares down here. Free shares. And I'm like, listen, if I would have avoided this, if I would have got out of this, I don't get the free shares that aren't $30. They're now $100. They were free. So you didn't avoid shit by getting out of these. It's this velocity of price, man. So look on a monthly when the RSI bangs this. And the guy's like, well, I don't know how you would pick tops and bottoms. It seems impossible. It's like, no. In 1978, a guy wrote a book, man, called New Concepts in Technical Trading Systems. I'll put it on my story on Instagram, the actual original hard copy, written copy. This shit's serious to me, man. So I need to go see who made up all these things, look at their stuff. I've got 4 other books by this dude. 2 of them have nothing to do with trading. This guy made me a lot of money. And he didn't shit all the books up. He's dead. So should we buy oil here? No. All my oil shares, dividends are going to cash. Why? I can find much better places to allocate that new capital, the free money. So, I'll take that 220, man. I'll go put in something else. Maybe we'll roll it to T. Where's T at? Maybe we can roll it over here. I don't know if that's the play. We'll look and see. But look at T on the daily. So I own T in this account where I house all my oil and stuff. I don't want to buy any more oil, but I got all the dividends set to go to cash. Shit, I don't know, man. They could run though. I'm not saying the oil can't go higher. I'm just saying for me, I'm a portfolio manager, asset manager. I don't want to get out of them because they're the strongest stocks in the stock market right now. I don't want to press them because I think there's better upside allocations available for me and my money in as far as dividends and future appreciation. Like I'm in accumulation, so Intel being down this low, man, hell yeah, I'll take some of that. I got plenty of time. We'll ride this cycle out. I want Intel to pay me $200-300 every time they pay to go with that $220 from like let's get this to $200 a drip, man. Let's get AT&T to $200 drip. Let's get all the, like, you see what I'm saying? That I'm trying to. Originally, I remember, man, I was trying to get all my stocks to $100. Like, pay me $100. Like, that was my goal. Get the dividend to $100, and then I'll weight the stock based on the money flow. I might add some, trim some, but I want to keep that dividend at $100, however many shares that is, right? And then once it hits it, I turn my attention to other positions, other stocks, other sectors, so that I could build out this machine of positions in different sectors that paid me money. Some were like Uber. It doesn't pay me any money. It's a speculation. So I got to weight it in conjunction with the rest of the portfolio, right? So I have almost $1 million in there. I don't have $1 million in Uber. I'm trying to get to 60,000 in Uber. And so the way I do that is over time, banging stage ones. Once I got my I'm good, man. Let's just let it go now. Now I turn my attention to something else, man. And I can have multiple of these, so I'll spread it out this week, because I know I got much time, dude. As these go through these stages, this is years, man. Right? Amazon didn't get to fucking rip until it was 15 years old, man. Look at Tesla. They don't wake up next day, bam. It takes a minute, man. They've been around for a minute. They're maturing. Google, look at Google. Go look how much wealth creation was in Google in the last 10 years. Roku's not that old. Dash, Airbnb, there's 20 or 30 of these, man, that are not that, but I don't want to overpay for them, man. So some money's allocated to that. And then some money's just straight up trading, man. Here's a trade that I just put on. Now watch. This is what I'm looking at. This company is worth north of $28. It's been there before. Biotechs are getting hot. A lot of good press out on this. I see it money flowing, right? Now, these look small, dude. These are big-ass moves. You're like, what do you mean? Dude, that was $17 to $27. That's a $10 move. That's $1,727. Bam! Comes back down. And what? Stops. Those moving averages come in. The candle that got my attention is I'm watching different stocks. I'm not filtering. I'm looking at them with my eyes. It's that day right there. It confirmed this. So now I look to see, is it working off the RSI? Is RSI, yeah, it looks, you could say that's working it off. We need that level to hold. Where's the MACD? It's turning. All right. If I get this coming out, I know it's game on, man. Meaning that the dominoes are lined up. Look, a move up, right? That had already turned. The crossover. Same thing, right? But where's the buy? The day it got above that 5-day moving average. Bam. So now I got my 1, 2, 3, 4, and I'm calling this at 1. There's my anchor point, right? Right there. Which is just confirmed every day. It either is or isn't. We're going to find out real quick, right? So if I'm trading, stop somewhere in here. There's your stage 2 breakout. Sometimes if you tagged it early enough, you'd be like, man, I don't know if I want to add here. Press it, man. Like you want to add to winning trades, meaning you were right. It bumped up. Add to that shit, man. Because we're going to take it back off up here, man. If we're trading, press it. Press it. And if you're like, well, what if it pulled, then get stopped out, man. But when you press winners, it way makes up for it, man. And then it runs. As soon as RSI hits, we know what. Got to get out, man. Not all in one day, 1 second. Maybe. Maybe we do. Maybe you're bam, bam. Hit it and get it, man. That's it. I'm out. Give me my money. That was a $10 move. I'm good. I'm not married to this stock, man. That was a movement of price. Right? So if I'm looking at this on Monday, what do you think I'm thinking? So I'm in this. We're up, I don't know, 6-7%. What are we about to have? Stage 2 crossover. Remember, what's the target? $26. It's $5 upside yet. I could press this. So if this holds and this breakout's I could add to it. And look, crossovers. MACD's crossing. Still plenty of room on here. The RSI is just now, look, remember Wallace Wilder said, if the RSI crosses the center line, that's a signal. It's like, well, JW, I appreciate that, but the money flow already told me, man. But thanks for the RSI. And there's my target, man. Pow. What a thing of beauty. Now we'll see if it plays out. We got little fundamentals. So all you nerds, you go read on it. What are they doing? What kind of company is this? You can go read on that. Or you can just technically trade this. It's in the right sector, chart setup, looks good, So what I've found, man, if you just read Barron's, if you just stay in the market like people stay in sports, like, if I used to follow football close. I used to bet a lot on it. You just follow it, man. The Tom Brady, this guy, that guy, he likes this, this team. After a while, you just know a lot of shit about football, man. Same in stocks. People can know as much as they want. You don't need to go to college. Matter of fact, most people I meet with finance degrees don't know shit about stocks. This is a chosen, learned behavior. I get a lot of people, I don't have time to trade. Bullshit. You can do this in the bathroom. It's a daily chart. You're like, okay, I got an anchor point. Then you take your butt to work. You get home from work, you're like, look at that, it closed right there. And I'm like, yeah, it's above the anchor point. And then you're like, yeah, but I'm so busy. And then next morning you get up when you have your coffee, you pull up the chart. You don't even need to see the open. I don't know where people think you need to watch the open, and you don't need to do that, man. You just need to look at this. And then you're like, oh, but I'm so busy. And it's like, okay, 5-second look, because we look every day. I don't need to look very long. I open my phone to stock charts and I go, look at that. Anchor point, it's holding it. Man, we also have a little support line here. And you're like, what do you mean? Meaning, look where price has stopped here a couple times. We know that previous resistance often becomes support. Look at that. You're like, and then it's like, yep, let me take it. Where's the MACD? Yep, just ticked over. We're getting lined up. Where's the RSI? It's going in the right direction. Right? It's going in the right direction. Bam. Buy. Place my stop here. Then take your butt to work. That took a whole 1:30 seconds. Target $27. And then you go, is that even possible? Let's go and see if that's even possible. IGMS. Is that price even possible? IGMS is trading at a 52% discount with a $44 fair value. IGMS Bioscience is a biotech company engaged in development of IgM antibody therapeutics for the treatment of cancer, infectious disease. Right, I don't want to hear all that. I don't know what any of that means. Okay, so I'm relying on other people. All I know is this sector is hot right now. Okay, so once I know the sector's hot right now and I find some undervalued asset, maybe I'm in Barron's and I'm reading an article and they're like, this company's got a lot going for it. So you're like, really? Let me see. And you put it on a chart and you go look and you're like, whoa, money flow pattern. There's the previous break above the 5, and then it ran up and tagged the RSI, and then it went sideways, and then it came down, and then right there, and then okay, I got my anchor point, I set my stop, and then okay, here's the target, $26. Bam. I'm out the door. And that trade just plays out while you're selling houses. Or while you're doing whatever, man. That trade plays out. You can have a bunch of those going. But what you got to decide is when that pulls back under this spot, what are you doing? And if you're cutting it, then you cut it. Then you got to understand, guess what? The market could go through months and months and months where you lose money. And that's when everyone's style drifts. You take your mind off it, right? That's our Achilles heel, man. That's our Achilles heel. What I've found for me to solve that is I backed up my trading. Most of my trading is position trades in growth stocks, meaning I'm building a position over time. Those may move against me. It's just a piece of the pie. I have crypto in there. It could move against me. I got a piece of the pie, and I've got most of my money in dividend stocks. I hope they move against me because my plan is to buy more. And then I just watch these and I allocate new money as money comes into my life, right? That's where, like, getting the buckets, like, this is a constant state of activity and adding, man. It's beautiful, man. It's beautiful, man. This trade's setting up nice. Another one, and I'll end, man. I went long. Went way too long, man. Silver is setting up. Nice little money flow pattern. It's trading at a 2-year low. Couple of things I want you to see on this. One, it's below the 200-day. Has it ever been there before? Yes. Okay. Been there a bunch of times. Even up here, it banged it. Banged it. Banged it. Banged it. Right? So guess what? Very good chance we could bang it again. All right. With that said, have we hit a possible low? Wallace Waller said, the relative strength index is a tool which can add new dimension to chart interpretation when plotted in conjunction with a daily chart. Some of these interpretive factors are tops and bottoms, which is the name of a strip club outside of Fort Hood, by the way, are indicated when the RSI goes above 70 or below 30. There we go. It banged it. There we go. Now what? I'm looking for an anchor point. That's also a doji reversal candle, by the way. Now here's what's cool. We had a previous box here. very, very bullish thing is for this to get back into that space. When a box gets taken back, we call it back in the box. Now, this was back in the box from a while ago. Further back we go on that, the less, meaning this would have been the most powerful back in the box because it's the previous box. Hope that didn't confuse anybody. Probably did. That's a box too, though, and we are back in a box, but it's a box back. Our target, 119, and that would complete at stage 1, 2, 3, 4, 1, 2. Get it? Becoming a 3, right? But this could run. This could run and take that 200. It's at a 2-year low right now. 2-year low, man. 2-year low. Okay? If this box talk, that's a weird way to say it, is of any interest, if you have my course, Getting Started with Stock Charts, we spend a minute on that. Anyway, this trade's setting up, man. I'm in it. Now, we've had several losers in this. This is really undervalued. Doesn't mean it can't go lower, of course. We'll see how it plays out. Maybe the 5th time is a charm. I would place a stop. Anybody trying to preserve capital right around in here. You know? And if you buy the breakout, you might even bring that stop up a little. And then we're playing for this target if you're pure trading. I held it on the last move down, looking to build it up. I'm just taking a shot that silver's stupidly undervalued and could go higher. I'm in a leverage position. The problem with that is decay against you. It's not that big a position. And when we turn around, I think I'll make up for it. We'll see. Be careful with triple leverage funds. If you don't understand them and you're scared of leverage, SLV is the same thing. Unleveraged, this is the actual ETF of silver. So this won't go to zero. You're trading silver. If you wanted to buy and hold silver, this is the cheapest, easiest, most effective way. The SLV, better than coins in an investment sense. In that you can move in and out with the click of a mouse. Coins, you got to load these heavy ass coins up, take them in, and the store may hit you for 3 to 6% commission. And guess what the commission is on SLV? Zero. I had to explain that to a guy. I was like, I sold silver one time, shit ton of it. I had to carry it up there. I'd fucking give them my driver's license. They took 6% or whatever it was to give me the money. Well, they charge you to buy it too. If you just come over here to SLV, there's no charges and you own it unless you're going down the conspiracy rabbit hole that you actually think you're going to need physical silver to survive in the world. If that's your thesis, no, do not buy the SLV. But if you think society will survive and we will continue on and not need guns and gold, then I would buy the SLV. And if you want to leverage that play, the AGQ, which is a triple leveraged silver, which one of my biggest trades ever was in this. And I ran it from $30 to $300 as silver went to like $50. It was fucking amazing. Because it doesn't do it in a single day, right? So the leverage begins to multiply on the way up. So as silver does 20%, this does 40, and then it comes down a little, and then it does 40, and it grows exponentially on the way up as it does on the way down. So this thing could easily run pretty high, man, on the way back. But not without risk, man. I appreciate you guys tuning in, man.